Hello everyone, Steve Huhta here from Century 21 Amber and HousesInSouthBay.com. And lately, there's been a lot of talk about an upcoming recession and how it might affect the housing market. So what is a recession? Well, a recession is defined as a fall in GDP for 2 consecutive quarters. As you can see, GDP rises and falls seasonally, and even when we have a significant fall, it comes back up the following quarter. So why are we even talking about a recession on a real estate video? Well, because many people are worried about how a recession will affect their home buying or selling options. But first, if GDP rises and falls all the time, why do we think a recession will even happen anytime soon? Well, that really is a good question, because unemployment's down, wage growth is up, and we're strong in the world economy. So why do we think it's going down? Well, economists predict the recession will be caused by trade policies, tariff wars, stock market corrections, and uncertainty due to politics and the upcoming election. Economists believe that a recession will probably occur in 2020, but many believe that it will be so brief we might not even notice it. But so now you're worried, a recession's coming, and you remember 2008, the whole housing market fell apart. People were losing their value in their homes, and some even losing their homes. This sounds terrible, but does a recession really spell bad news for the housing market? Well, not really, and especially not this time. As we can see, out of the last 5 recessions, housing prices only dropped twice, while they increased during the other 3. Out of the 2 that dropped, the recession in 2008 was caused mainly by the subprime mortgage crisis. So essentially, bad practices in the housing and mortgage industry and bad government policies towards those industries caused a recession, and in turn, housing prices fell. Now in 1991, the economic recession was somewhat similar to the present, although we're in a stronger economy today. We were not facing any major economic challenges except for higher oil and energy prices during and after the Gulf War. However, falling home prices were the result of Federal Reserve restrictions and the changing housing market after the passage of the Tax Reform Act of 1986, which affected how many people used real estate financing and tax benefits to shelter some of their personal wealth. As can be seen in all other recessions that were not driven by challenges in the housing and mortgage industry, home prices went up as a safe place to invest, while other areas of the economy suffered. So what does this mean if you're thinking of selling your home? It means you're probably in a great position. Because of recent high rates of appreciation, many owners have quite a bit of equity they'll be able to get out of their homes when it sells. Although appreciation has slowed and is predicted to remain low over the next year or 2, but however, low inventory will keep prices up, and it'll remain a seller's market for the foreseeable future. So if you're thinking of selling, now is the time. The appreciation slowdown in a way makes this the top of a short-term market. Well, we know everything's good today. The future's unknown. Now's the time to take action. Well, so great, sellers should be okay, but what about all the buyers out there? Well, it's also a good time to buy, even with a downturn. The economy still looks strong, unemployment is very low, wages are up, interest rates are their lowest in 2 years. This all makes for good affordability. Now I know you're like, affordability. Steve, are you crazy? Have you seen home prices lately? And yes, prices are sky high, and we may even think kind of getting out of reach. But in reality, higher incomes and lower interest are making homes more affordable. On this chart, the higher the number, the less affordable a home is in the economy. As you can see, we're doing better than most of the past 10 years. But yes, it's less affordable now than it's been over the last 30 years. But you must remember, you still need a place to live. That rents are rising faster than home prices, so put some stability in your housing expense. Your mortgages will always be the same, whereas rents continue to rise. Stop paying off your landlord's mortgage and start building equity and wealth in your own home. Now, to stay current on the real estate market, upcoming local events, and to view my other videos, go to my website, HousesInSouthBay.com, and sign up for my newsletter. When you sign up, you'll also get entered to win my weekly and monthly giveaways, including a 7-day cruise for 2 to Mexico. And remember, if you or someone you know is thinking of buying or selling a home, or just has a real estate question, contact me so I can help. Bye for now.